The real estate market is slowing down, shifting towards a buyer's market due to rising inventory, reduced pending sales, and external factors like high interest rates and global conflicts. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, November 3rd. We know that selling or buying a home can be stressful and confusing. In this series, we use our more than 50 combined years of experience helping clients buy or sell homes to explain what the latest San Ramon real estate news means for you as a homeowner who's thinking about selling or as someone who is looking for a house that you will love to call home. Let's start off by looking at this week's market activity. This week we had 28 homes on the market, which is 7 more than we had last week, with an average asking price of $1,873,000, which is up from last week's average asking of $1,778,000. 3 homes went pending, which is not a lot, but more than last week's 2, with an average asking price on this week's pending sales of $1,565,000, which is significantly lower than last week's average pending sale price, which was $2,687,000. And 7 homes sold this week, which is fewer than last week, with a lower average sales price down to $1,534,000. Okay, so now that we've seen how the market performed over the past week, let's look into the broader trends that provide insights into its overall health and the potential future direction. But before we proceed, if you find this information helpful, you can subscribe so you'll always stay up to date on the latest real estate news here in San Ramon. And why not share it with a friend? Everyone deserves to be in the know about their local market. Okay, let's look at this week's indicator, shall we? We have witnessed a noticeable increase in inventory this week, with the number of active homes rising from 21 to 28. This buildup can be attributed to a decrease in pending sales, as only 3 homes went pending last week, which is about half of what's typically seen. Furthermore, with 10 new homes hitting the market and only 3 pending sales, the inventory has seen a significant boost, which leads us to what I think is maybe our most concerning indicator this week, and that is the turnover rate. This market is showing its lowest turnover rate since January 15th of this year. We're back here. While it's typical for the market to slow down in the months of November and December, it's worth noting that last year at this time, the turnover rate was considered normal at about once a month. Coupled with the growing inventory, this trend becomes an indicator that we really need to watch closely. This week we observed a slight but encouraging change in the amount a buyer was willing to pay over the asking price, which has increased by $3,000 from last week. While it may seem like a minor shift, it's a positive signal in light of some of the more concerning developments that we just discussed. The current overbid, just under 1% more than the asking price, falls within the range of what we typically see in a market that is slightly favors sellers, but is basically a wash. However, it's essential to note that the real estate landscape has likely evolved over the past 30 days, and today's buyers may not be reacting the same as the most recent past. This week, we have seen a 2% decline in the average sales price, bringing it down to $1,951,000. This drop can be attributed to a combination of factors. Approximately half of this decrease is due to the declining overbidding in prices, reflecting a shift in buyer behavior. The other contributing factor is the strength in sales of lower-priced homes, where the market does remain robust. Looking ahead, based on the 30-day rolling average of pending sales, we anticipate that this average sales price will continue to exhibit strength and probably remain more at this plateau level. There is some good news this week in the high-tech stock equity indicators. The Triple Q Fund, which tracks the high-tech industry, saw a noticeable increase of about 3.7% compared to the previous week. This positive movement indicates continued investor confidence in the tech sector. There has been a growing concern that investors might consider shifting a portion of their portfolios away from stocks and into safer assets like T-bills and CDs. This potential shift isn't necessarily driven by worries about the equity markets necessarily, but rather by a desire to diversify their holdings and secure a 5% income stream during these uncertain financial times. And finally, we have received a bit of positive news as in today's market indicators, as interest rates have experienced a slight drop by a few basis points, now standing at 7.76%. While this decrease may not be substantial, it is reassuring to observe that they aren't continuing to climb at the moment. It's a small but welcome respite. It's worth noting that despite this recent drop, the current rate is still 1.2 percentage points higher than it was at the same time last year. Any reduction, though, in interest rates like we saw this week will help to stave off any potential crash in the housing market. This past week has presented a series of challenging trends that unmistakably point towards a slowing market, approaching what appears to be a buyer's market. The indicators are clear. Inventory is on the rise, pending sales have slowed, and the fierce bidding wars that were once commonplace have largely subsided, perhaps limited to only a select few exceptional properties. Beyond these internal market dynamics, external factors are increasing buyer anxiety. Interest rates remain at the 23-year high, adding financial pressure. The high-tech sector, which is a significant source of buyers, is treading water, contributing to overall uncertainty. And moreover, the overlay of two active conflicts, one in Europe and one in the Middle East, is further undermining confidence in the market. These complex challenges emphasize the need for vigilance and strategic planning in the evolving real estate landscape. Thank you so much for joining us this week for our weekly update. We hope this summary and commentary helped you understand how our evolving market is impacting your options. If you have any specific questions about navigating the market to sell or buy a home, don't hesitate to drop a comment down below or reach out to us directly. We're here to help guide you every step of the way. And if you did find this information helpful, don't forget to share it with a friend and hit the subscribe and ring the notification bell so you'll always stay in the know about the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.